So, Jake, I know this week it looks like you were writing about life insurance, and it seems like the pandemic has prompted more younger people to buy it. So, kicking it over to you, man. What's that all about?
Yeah, thanks, Justin. So that's right. So the pandemic has recently encouraged younger buyers to get into term life insurance. So applications for life insurance policies soared 4% in the US in 2020, which is the highest year over year annual growth rate since 2001 when they started tracking this activity. The deaths from COVID-19 encouraged many young people who previously neglected buying life insurance to finally then take action. These many Americans made purchases to replace or add to their employer provided coverage. Due to the current state of the economy, they could lose their job, they could get laid off, and they could lose their coverage. And I really like to quote from this mutual Northwestern Mutual advisor in San Diego. She said, "The silver lining of the year was that it did help people realize they needed to prioritize planning for the worst days as well as the best days." You never know when you're going to need this life insurance. A lot of these term life insurance policies, 30 years, you never know when you're going to die. So it's always a smart move to do it before the curve. The industry sales growth increased despite some life insurers turning away business by suspending sales of certain types of policies. And these decisions were linked to March drop in already low interest rates because these insurers put a lot of their premiums into bonds. So I just want to go over a couple statistics that the Medical Information Bureau has put out. They saw a 7.9% growth for applications under 45 compared to 3.8% increase for consumers 45 to 59. So this means millennials are, getting ahead of buying this life insurance. The younger policyholders were generally favoring this term life insurance policy, which provides death benefit for a period of up to 30 years. And I was looking more into, what were these buyers typically buying into? And I was looking at Lincoln National, and they normally a buyer purchases a 20-year, $500,000 policy costing around $350 annually, which is pretty much the base price for these policies. And Lincoln's term life applications were up 25% year over year through September for buyers under 40. And for the month of December of 2020, it was the best returns for New York Life, with double-digit percentage increase in both number of life insurance policies sold, and it was new sales premiums. So we're just seeing a big skyrocket in the number of term life policies that are being bought.
I know we got a
Yeah,
couple
so I
veterans. Oh, sorry, Matt. Go
yeah,
ahead. I was just going to say we got a couple veterans of the life insurance industry here. So, what do you
yeah.
guys think about that?
I was just gonna say, I know Nate also worked in it. I worked for New York Life this past summer, and I can definitely say that we had a lot more people that were just worrying about death. I mean, you have death all around you from the COVID pandemic, so people were trying to sign up. And I also would suggest that people younger would only go into a term life policy, because th- some um some insurance companies, they're going to want to try to get you into a whole life policy, which the difference between a term life and a whole life is term is only for 10 years, 20 years, versus whole life is throughout your whole life. And the whole life policy, yeah, you'll get a higher death benefit, but you're going to be paying way more annually. And as a young college kid, our only expenses are really our college debt. And a $2 million policy, like what are our parents going to do with $2 million after we die? Like it's kind of just it's kind of useless. So I think that term life is definitely the way to go. I mean, I have a term life policy, so I think that it's definitely a good investment. And people, I mean, people need life insurance. It's definitely something that it's a necessity for some people.
Yeah, I second everything you just said there, Matt. Again, I'll make sure I restate it again. They will try to push a whole life policy on you. So you have to be aware that you do not want this. I mean, at the end of the day, if you do want $2 million in your parents' bank account, then so be it, get them paid. props to you. But for me, I'm a broke kid, can't really steep to those levels. So I'm gonna get a term life policy. Now you can get 10, 20, 30 years. It's all based around what you feel like your needs are, whether you feel like you'll need it for a set period of time until you get a specific job, or until maybe you got kids right now, like we don't really know your situation, until they grow up, then you'd be able to no longer need the policy, like things like that. It all aligns to your specific preferences. But at the end of the day, it's an investment into yourself for your well-being and whoever is looking after um, all your I guess all your payments of debt when you're gone, helping to make sure that they can cover all those things as well.
Yeah, and I want to go a little more in depth of what exactly term life insurance is compared to the other types of insurances. So term life is a type of insurance that guarantees the payment of a stated death benefit if the covered person dies during a specified term. And once the term expires, the policyholder can either renew it for another term, which then increases the premium, or convert the policy to permanent coverage, or allow the term life insurance policy to terminate completely. This term life insurance is then attractive to young people with children. Parents may obtain large amounts of coverage for, reasonably low costs. And upon the death of a parent, the significant benefit of this lost income that they lose from, the death of a loved one. These policies are well suited for people who temporarily need specific amounts of life insurance. And for example, the policy holder may calculate by the time of the policy expires, their survivors will no longer need the extra financial protection because they will then have enough assets to then insure themselves. And I want to go into a brief example of what term life insurance is. So I have a brief, story here. So 30-year-old George wants to protect his family in an unlikely event of his early death. He buys a $500K 10-year term life insurance policy with a premium of $50 per month. If George dies within the 10-year term, the policy will pay George's beneficiary $500,000. If he dies after he turns 40, when the policy has expired, his beneficiary will receive no benefit. And if he renews his policy, the premiums will then be higher, and his initial policy, because they're based on his age of 40 instead of 30. And I was looking more into this, if you renew your term again, if you get a terminal illness in your first term, you're not able to qualify for a second term unless you pay like substantial premiums on top of that. So that's another cost to it as well.
Awesome. Thanks, Jake. I know insurance is one of those things, especially as college students, that I'll just state it can be boring, but it's necessary. And not only can it be a little boring, but because we don't want to learn about it, it can be daunting. So this has been great. I love that example, Jake. I know something I learned in the wealth management class and our insurance class is that you can start with a term policy, you can pay into it, you can eventually roll it into a whole life policy when that time comes. So I know that there are policies, term life policies out there, like you guys are saying.